Unbiased Trades here, and today we'll be going over what is a system. So this will be a general video about what you need to think about when creating a system, what is the basics of a system and the fundamentals. If you want a great example of a playbook, I do have a video on my own setup, and also Kevin Lee did a great video recently, Trading 102, which was a whole video about the playbook system, and it was really, really good, so definitely go check that one out as well. So first, what makes a trade? You have four things that makes a trade fundamentally. You have your entry criteria, your exit criteria, your risk management, e.g. stop placement, and sizing. There can be more here, you can add more, but I think these are the four fundamentals, at least for me. So yeah. Next, how to make a system. To make a system, you will need an alert system. So what is alerting you to a potential trade? This could be the gap percentage and it's under a certain market cap. Could be high of day at a certain time. There's tons of opportunities here to what could alert you to a system trade, but you need to be thinking if you're trying to trade intraday and you're looking at gappers, then maybe you could incorporate time, gap percentage, float, market cap, outstanding shares, volume, tons of stuff. Next is entry criteria. How will you enter? And this needs to be repeated. So this could be an example is once high of day is formed at a certain time, then a 5% bounce. You can easily go back on previous charts and check that. It needs to be something that can be repeated so you can backtest it and then find out the performance of your system / entry criteria. Next is risk management. So where will your stop be? Will it be trailing? How much account size will you use? This is a big point. So if you are fine with bigger drawdowns, then you could use more account size. If you're newer, then I definitely would recommend using smaller account size, if really any account size, just like very small amounts. And then you want to be thinking, how can you place a stop that is going to be repeated as well? So this could be a percentage stop. This could be off market structure. So something very clear like high of day. Could be trailing, so you could just enter with like a 3% stop and then it kind of moves down as you go into profit, so that's an option. Next is exit criteria. So how will you exit the trade? Are you going to be using an EMA? So some people like to get out at the 200 EMA. That totally works. Using certain average percent drop or gain if you're long or short. And abnormal volume. So this could be on a heavy flush if you're shorting and it has got abnormal volume. So like 1 million volume and it's only been trading like 100K per minute. That would be abnormal and you could get out on that flush. Next is analyzing your system. So you'll need historical data. I do offer historical data services that give you code so you can pull historical data from multiple data providers, which saves you a lot of time. But if you're not interested in that, you can just manually do this by going through a list of stocks on certain dates to go check manually. So if you were looking at gappers, you could find all the gappers from the past 3 months, go back to their charts individually, and then just note down how your trade would have gone and how it would have performed. Next, you'll need to work out your system's win rate, average gain and loss, Sharpe ratio, max drawdown. I recommend plotting this on a graph so you can see how volatile your system is. So for example, if it's just a quite straight line up, then you can tell that that's not very volatile, not big drawdowns really. But if it's going everywhere on the graph, then that probably means you're going to have a lot of emotional intelligence to not overtrade or revenge trade. So that's something to keep in mind when you're looking over your performance. Next is filtering to see what creates best performance, frequency, and lowest drawdown. This is a case of where you don't want to overfit or underfit. So an example would be you don't want the max profits, but then a really low frequency. You don't want the lowest drawdown, but then also like no profits. So there's a lot of ways this can go. My general recommendation is try and do the middle ground of everything and try and get where you are satisfactory with all of them and a very nice equity curve so you don't have to deal with too many emotional issues. But this is also, it depends on the strategy and the person. So yeah, that's it for this video. If you want to find out more about system-based trades, then I can do more videos in the future with more detail on kind of each section. But yeah,